Okay, this person asked me on Twitter, I think. Hi, Spicy. Suppose you are in the middle of a scalp trade based on a specific setup and thesis, and suddenly the altcoin begins moving in lockstep with BTC price action, whether due to a sharp BTC move, market-wide liquidation, price manipulation, or an unexpected black swan event, and the trade starts moving against you. How would you handle this situation? And then he gives a couple of options, but I want to basically explain it. So it actually, you know what? I don't even need to look at that. I'll link the thread. I'll link this thread in the comments. And I'll try to throw it into the description as well, just so you can have a look at this. It's just a cheat sheet for BTC correlations. This is before the trade, but the same logic actually applies for while you're in a trade as well. And how so is going to be based on the relative change of the altcoin and BTC correlation. Okay, so imagine that we have a giant staircase in the altcoin. And imagine Bitcoin is ranging. During this little cross section of the price action, the altcoin to BTC correlation was low. During this cross section of the price action, it was also low. So it was low, it was low, it was low, it was low in all of these cross sections. So what is the relative change in the BTC slash altcoin correlation between this section? I'll use a different color. Between this section and this section. The relative change is low because it was low and it still is low. What about this one and this one? It was low, it still is low. Now imagine that all of a sudden we have a huge dump in the altcoin, and at the same time we have a huge dump in Bitcoin. Now when we compare that little slice of price action, now we actually have high correlation because the altcoin was following whatever BTC was doing. So it was low, it was low, it was low, and now all of a sudden it's high. So we went from low to high. If we went from low to high, this is all of a sudden a very big jump. Notice how if we go from low to low, this is a very small jump, right? But from low to high, this is a very big jump. If something very massively changed in one of the variables that you use to determine whether or not you should or should not enter a trade, then this could be because there is a high relative change in the market condition. Meaning, the market condition could massively change in your favor or massively change against your favor. If you're unsure, if something wild happened in the price action and you're not sure whether it's going to massively benefit you or massively work against you, by default, I would assume that this crazy thing that's happening, whatever is happening, is working against me. Me personally, better safe than sorry. If something crazy is happening, I just don't want exposure to that because I have no idea how to play it, right? But if I do know how to play it, then cool. But most of the time, I don't, right? So when something wild happens, wildly different is happening, and I have no idea how to play it because I'm unfamiliar with whatever the hell is going on, what do? I just market close out of the position. If I wouldn't enter a trade because I see something crazy happening, then I wouldn't want to be in that trade. Because entering a trade and being in a trade is pretty much the same thing, right? Because in all moments of you being in a trade, in every single millisecond, if you think about it, you're always asking the question, should I close this trade? Yes or no? Should I close this trade? Yes or no? And in every single millisecond, you're answering that question. And maybe in the first like 30 39 minutes of a trade, you're always the answer to that question is always, I want to stay in this trade. And it's only on that last minute where actually for the first time you answer a different question, you give a different answer to that question, which is actually I don't want to be in this trade, right? The logic for entering and the logic for staying in something is pretty much the same. So yeah, if something massively changes while I'm in a trade, I want to reduce my exposure to that. But yeah, I hope that answers the question. Yeah, I would immediately exit. I would immediately exit the trade. I would not stay in the trade. I much prefer to exit the trade. And if I'm unsure of the data, like if I don't have the data on that thing, on that crazy thing that just happened, and I exit the trade early, just like out of panic or out of like confusion or uncertainty, that's fine to do that. And you know what? It could actually have been the wrong move. I don't care. I would rather reduce my risk and make the wrong move rather than increase risk and make the wrong move, right? So I'm okay to just exit early in those situations. And later on, I can always just review the last 20 times that I've done that, or the last 30 times that I've done that, and seeing how much impact does this thing actually have on my performance. If I'm actually making the wrong move, cool, I'll go and iterate later. But if I don't have the information, I would much rather just play it safe and exit. Anyway, I hope this answers the question. If it doesn't, like if this clip didn't answer the question and if this thread didn't answer the question, don't hesitate to send me another DM and be like, hey, I still don't get it. And I'll go back and forth with DMs with you and until we're on the same page. But yeah, I hope that was helpful. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include like total combined within these two guides, there's more than 75 trade screenshots for you to study, like through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Like literally in the journal, there's a tab called educational resources. And in there, I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.